Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of ICICI Bank Limited, ticker symbol IBN. They are one of the leading banks in India, and at the time of recording today's video, their ADRs are trading for $21.89 per share. Year to date, their stock price is up about 10.5%. Over the past year, their stock price is up 15%. Going back 3 years, their stock price is up 22.5% compounded annually. Over 5 years, that's about 19.5% compounded annually. Over 10 years, they're up 13% compounded annually. And going back prior to the global financial crisis, they're up at a rate of about 11% compounded annually. In addition to this rate of return, they've also paid out dividends in a somewhat lumpy way over this time frame. Currently, they're trading pretty close to their 52-week high. They're a large banking business with about a $76 billion US market cap. So for some background about the business, ICICI Bank Limited provides banking services. The company's operating segments include retail banking, wholesale banking, treasury, life insurance, and other banking businesses. It generates maximum revenue from the retail banking segment. Retail banking includes exposures of the bank, which satisfy the 4 qualifying criteria of a regulatory retail portfolio as stipulated by RPI guidelines on the Basel III framework, as well as includes income from credit cards, debit cards, third-party product distribution, and the associated costs. The treasury segment includes the entire investment and derivative portfolio of the bank. Wholesale banking includes all advances to trusts, partnerships, firms, companies, and statutory bodies. Additionally, the company offers security investment, broking, trading, and underwriting services, and merchant banking, trusteeship, house finances, pension fund management, asset management, investment advising, and private equity/venture capital fund management services. As of March of this year, it had a network of over 5,400 branches and over 13,000 ATMs. ICICI Bank Limited was founded in 1955 and is headquartered in Mumbai, India. So for today's fundamental stock analysis, we're going to be performing our very own 10 Towers banking analysis, taking a look at 10 key financial metrics for banks to come to an overall holistic and beginning understanding of ICICI Bank based on their fundamentals. This 10 Towers analysis came about because I was not able to find a holistic and beginning fundamental analysis for banks. So using some inspiration from the 8 pillars by Everything Money, combined with my own research into banks, I put together these 10 metrics that are going to help identify the fundamentals of a strong bank. Just a disclaimer that this analysis is very much a process of learning in public, and that I continually want to add and improve to this analysis in any way that's going to help highlight the fundamentals of a good bank versus a bad bank. So I'm constantly looking for feedback and would really appreciate any in the comments down below. So without further ado, let's get into our analysis. So starting off here with tower number 1, we want their average PE over the last 5 years to be below 12.5. Currently, they're trading at 44 times earnings. They've traded all the way at a high of 134 times earnings, though that was likely due to something passing through their earnings, and they've only traded at a low of 34 times earnings. So quite expensive. Over this time frame, they've traded at an average of 59 times earnings. So this is going to be a big fat X to start off here on tower number 1. The business has been trading for a very high earnings multiple over this time frame. While it's true that India is a developing and growing market, their earnings multiple is way higher than any of the other American, Chinese, Canadian, or Indian banks that I've looked at so far. Tower number 2, we want their average 5-year return on equity to be above 9%. So while their return on equity has been somewhat sporadic over this time frame, it went down to a low of about 5% in 2019. Since the pandemic, they've actually done a good job here and have produced above average returns on equity. Over this time frame, they're averaging almost exactly a 10% return on equity. So just above that metric we're looking for. This is going to be our first check here on tower number 2. Tower number 3, we're looking for 5-year revenue growth. ICICI Bank has grown revenues from $10.2 billion as of fiscal 2017 up to $13 billion as of the first quarter of this year. So this is going to be our check here on tower number 3 as well. We're 2 for 3 to start off so far. Next up, tower number 4, we're looking for 5-year net income growth. They've almost tripled net incomes over this time frame from $1.2 billion in fiscal 2017 to nearly $3.3 billion as of the beginning of this year, fiscal 2021. So this is a check here. Unlike other businesses, banks are not going to be valued based off their abilities to produce free cash flows. Instead, banks are actually going to be valued based off their abilities to produce earnings. So here, we're interested in figuring out what their average 5-year net income was. So in an average year over this time frame, ICICI Bank is producing about $1.8 billion US dollars in net income. We're going to come back to this metric later, so put it in the bank for now, but that's important, and that'll help us determine a reasonable valuation for the business. Next up, tower number 5, we're looking for 5-year deposit growth. So they've grown deposits from $90 billion US dollars in fiscal 2017 to more than $143 billion US dollars in fiscal 2021. So a strong sign here. This is a big check on tower number 5 as they've steadily grown deposits over this time frame. Tower number 6, we're looking for decreasing shares outstanding. So when you purchase a share of stock, what you're buying is a fractional ownership percentage in that underlying business. When a business decreases the amount of shares that they have outstanding by buying back stock, they're increasing your ownership percentage in that business, ultimately increasing the percentage of the business's profits that you're going to be entitled to without you having to spend a dime. So we want to see shares outstanding decreasing. Unfortunately, we're seeing the opposite here. Over this time frame, ICICI Bank has diluted shareholders by about 9%, so they've increased the number of shares that they have outstanding. This is going to be an X here on tower number 6. One key metric for a bank is deposit per share growth. So in this case, they've grown both their deposits and unfortunately, we're seeing that they've issued more shares. Ideally, we want a bank that's growing their deposits and buying back shares. However, in this case, they've still grown their deposits faster than they've been issuing shares. So we're still seeing deposit per share growth. Ideally, however, we'd want these shares outstanding to either be staying flat or better yet, going down when the business is trading for reasonable valuations. So again, this is going to be an X here on tower number 6. Tower number 7, we want their interest expenses as a percentage of total deposits to be decreasing over this time frame. Banks are a commodity business, so we want banks with low-cost producer advantages. Banks are ultimately earning money based on the spread between their interest income and their interest expense. We want their interest expense that they're paying on total deposits to be decreasing. So over this time frame, they've significantly grown their total deposits, while their interest expense is slightly up, but it's about flat. So this is going to be a check here, as the bank has a smaller percentage of interest expense compared to their total deposits in fiscal 2021 than they did in fiscal 2017. So again, this is a nice sign to see here on tower number 7. Next up, tower number 8, we want their non-interest expenses as a percentage of total deposits to be decreasing over the past 5 years. So this will help us measure how efficiently a bank is being operated, as non-interest expenses are going to take into account factors such as overhead and compensation. So both non-interest expenses and total deposits have increased over this time frame, so we're going to have to do some math here. In fiscal 2017, non-interest expense made up 9.5% of their total deposits, and in fiscal 2021, that has declined. Non-interest expense were only 6.6% of their total deposits. So this is a strong sign to see here on tower number 8. ICICI Bank has been operating more efficiently over this time frame, and this is something that ideally we want to see them continue doing into the future as well. Ultimately, in any business, we love it when that business is able to operate more efficiently, and banks are clearly no exception. So to recap where we stand currently, through 8 towers, we have 6 checks. Then tower number 9, we want their institutional deposits as a percentage of total deposits to be decreasing over the last 5 years. And ideally, we want a bank to be as close to 0% institutionally funded as possible. Here, if this data is displaying correctly, it looks like they have no institutional deposits. So it's been zeros over the last 5 years. If this is accurate, that would be wonderful, and that's exactly what we're looking for in this metric. This is something you're going to want to check out more in depth, and the way to do that is to dig into the company's filings to understand if this is true or not. So as we saw by looking at some of these Canadian banks, there are significant differences between the percentage of institutional deposits in Canadian banks compared to American banks, and some of these differences in funding bases might potentially hold true with banks of other countries as well. So this is a metric that you really want to understand more in depth And you really want to understand the regulation frameworks that are going to impact a bank here as well. So we're going to mark this as a check for tower number 9, and that is our 7th check so far on ICICI Bank. Yep. Then finally, the big tower of them all, tower number 10, we want their market cap to be below their average 5-year net income multiplied by 10 to give us a reasonable starting point for evaluation of the business. So currently, ICICI Bank has a market cap of about 75 or 76 billion US dollars. When we multiply their average 5-year net income of 1.8 billion US dollars times 10, that's only going to bring us to $18 billion. So we're off by nearly $54 billion here. This is going to be an X on tower number 10. And based on their abilities to produce earnings, it looks like there is a lot of optimism currently priced into ICICI Bank. They're going to have to continue being able to grow their earnings for a very long time to be able to justify this market cap. While they could be a great business, and it certainly looks like they're getting better across some aspects, you ultimately just have to do more research here to learn whether this is an appropriate valuation or not, because it certainly looks off based on our way of valuing the company currently. Then finally here we're looking at their dividend profile. So ICICI Bank has paid out dividends somewhat sporadically over this time frame. However, the big thing to note is that in the years that they pay dividends, it looks like they're producing plenty of earnings to be able to pay out these dividends with wide margins here. So in most of these years, they have very low dividend payout ratios. So that's a strong sign to see. Again, you're going to want to learn more about the business to understand the potential future predictability of this dividend, if that's something that comes into your consideration when looking at ICICI Bank. So in summary, ICICI Bank Limited. ICICI Bank, they're significantly off on our valuation metrics, but they're earning above average returns on capitals. Their revenues are up over this time frame. Their net income is up. They've also grown their deposits, but they've diluted shareholders. Yet still we're seeing deposit per share growth, which is a good sign here. Overall, their business has done better since the pandemic. They're growing their deposit base while keeping interest expenses pretty much flat. They're also operating more efficiently. And if the metrics concerning institutional deposits are correct, it looks like they have no institutional funding. But again, that's something you just want to dig into to understand better and understand if that metric is truly accurate or not. So again, this type of analysis is a holistic beginning understanding of ICICI Bank as a business. It is not financial advice in any way, shape, or form, and it is not a buy or sell recommendation of any security. You need to do your own homework here, and this analysis serves as a starting point to determine whether it's worth your while for you to dig into the company's filings and learn more about the business overall. As a value investor, you want to understand a business and all of its ins and outs, all of its nooks and crannies, as if you owned 100% of the business. Ultimately, you're trying to understand the underlying essence of the business, and you're going to continue your learning process about a business for years to come as the business continues to stay in business and keep evolving. Before making any sort of investment decision, you should always consult with the proper financial professionals. So with that said, that's it for today's fundamental stock analysis of ICICI Bank Limited, ticker symbol IBN. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below on any ways that I can improve this banking stock analysis. Also comment what company you want me to take a look at next time, bank or otherwise. Thanks for learning about ICICI Bank with me today, and have a great day.